Got Debadatta Chand, the CEO and Managing Director, here to talk about the numbers and more. Thank you so much for taking time out. Now, you have mentioned this 12 to 14% credit growth guidance for FY25. Considering the growth that you've witnessed this quarter, what is giving you the confidence that we will see a pickup?
See, in the current quarter also, we slightly calibrated the advance growth based on the deposit growth. And if you look at the segment of the advances, like the retail is growing more than 20%. The agri and MSME is slightly less than 10%. The corporate was at 2.9%. But within the corporate also, the core corporate, which is non-institutional, is almost the growth is 12%. So currently the pipeline is very strong when I see for July onwards. And there is a strong pipeline. And I think because we wanted to calibrate the corporate advance in line with the deposit, which again, possibly better this quarter. Now we have a good control on the cost of deposit. So I think then the guidance that you are giving of 12 to 14% is quite achievable. So that's also map out with the budget, which supports a lot in terms of the MSME growth. And in that scenario, and earlier also we have demonstrated that we are growing higher than 12-13%. So I think that is achievable.
Right. Similarly, your domestic deposit growth has been around 5% this quarter. Do you expect a pickup coming in?
It would actually, when we announced the liability management, reducing bit of dependency on the bulk deposit, actually this quarter, my bulk has gone down by 7,000 crore. And on December 23, we said that we reduced bulk by 25,000 crore. So in terms of profile, the focus was more on the retail term deposit and CASA. If you look at the CASA growth, that is at 6%, like many of the industry, if you benchmark, it is better than the industry benchmark. At the same time, the retail term, we have come out with a new scheme in terms of monsoon bonanza stuff. So in that scenario, I think the deposit growth is going to higher than the current quarter growth of almost 5.5%. The second aspect, which is important, if you look at the market liquidity, it is improving in last couple of weeks now. So a scenario where the market liquidity is better, we tend to have a higher growth. So that's why our guidance on the deposit has been 10 to 12%. And I think for the full year and also for the next quarter, we're going to achieve that 10 to 12% growth.
So do you see then a pressure on margins on NIMs also?
It is maintainable. Our guidance on the NIM has been 3.15 plus minus 5 BPS. And the good part of this quarter, the June quarter results is that we maintain the NIM vis-a-vis the last year. The last full year NIM was 3.18, and if you look at the June quarter, it is 3.18. So in a scenario when there is a cost pressure there across at the industry level, the managing NIM has been a positive outcome of this financial result we announced for the June quarter. Going forward, if you look at the cost of deposit, the June cost of deposit is the same that of a March. So we have now a fair bit of control on the cost of deposit. A couple of outlook that we are looking at, maybe because of, as I said, the system liquidity is improving, the rate may moderate on the wholesale deposit segment. So scenario like that, I think we are fairly confident of achieving the margin side, that is the NIM side, and would be in line with the guidance that we are giving of 3.15 plus minus 5 BPS.
Right, now fresh slippages have stood at about 2,700 odd crores, majority coming from the MSME and retail space. Is that a concern for you, and how will you mitigate it?
No, absolutely. If you look at the fresh slippage, we give a slippage guidance of 1 to 1.25. We're at 1.05. Secondly, if you look at the slippage vis-a-vis the June quarter of last year, it is an improvement from almost 0.48 to 0.18. Vis-a-vis March, yes, there is a marginal increase from 0.15 to 0.18. But these are more of a seasonal nature. It's nothing to do with regard to any incipient part of it. And looking at the contour of those slippages, I think the pullback could be quite possible in this quarter itself. So a scenario, and we are tracking the collection efficiency, the SMA book very closely. The collection efficiency rather in June has improved vis-a-vis March. In that scenario, I don't think the slippage would continue for this quarter. These are seasonal and possibly because of one of kind of a slippage in the retail. That's not going to happen in next quarter.
Right. And RBI has recently released this draft paper on LCR norms as well. How much of an impact do you see that on your bank?
See, June we have declared a LCR of 138%, right? So that a reasonably a good level. It's a draft guidelines. Normally we don't comment on the draft guidelines, but even if I take a thumb rule impact of that, the impact is going to be maximum 12 to 15%. So considering my current level of LCR, I'll be quite comfortable in terms of because my internal threshold that will look at LCR is 120%. So I think we'll be in a fairly better position to manage that impact of LCR in case the guidelines comes to finality.
The bank put on hold disinvestment in BOB cards, and what is the update on the Nainital Bank disinvestment?
See, BOB card, we are not looking of any divestment at this stage because that's the entity doing well. We want Bob card to get certain kind of a scale before we think of divesting that. As far as Nainital Bank is concerned, we're actively pursuing the process is on. So I can't give a timelines, but then we are actively pursuing for the divestment in Nainital Bank.
And do you have enough capital for credit growth this year? What are your fundraising plans?
No, absolutely. There's a very important one of the positive outcome of this quarterly is that my the capital adequacy improved vis-a-vis March by almost 54 bps, right? And the CET1 also has improved by 50 bps. So we are almost at 16.82 now, and even if we account for the growth of around 12 to 14%, the CRA, and we do have a very strong internal accrual. So I don't think we need to raise any equity at this point of time. That's not a visibility at this point of time. At the same time, the AT1 and Tier 2 will be replacing the maturing one. So we have already announced to the exchange that 7,500 crore is the amount that we wish to raise in this financial year through AT1 and Tier 2 bonds.
Right, Mr. Debadatta. Thank you so much for taking the time out and speaking with us today. We're going to take a